Happy Wednesday, everyone. Welcome to another edition of #askrobco. Hope you're all well. Hope everything is going good. We are here in central London, Euston Tower, in another wet and windy, cold afternoon this week. It's pretty similar to last week. Winter is coming and the clocks will be changing. I think this is what we're going to be set for quite a few months now. How are you, James? How is everything going?
Yeah, really good. Thanks, Rob. Really good. How about yourself?
All good, all good. So thank you everyone for joining. As always, you know how the platform works. You ask the questions on the right-hand side. We integrate the answers into what we discuss. We're going to touch on the latest intel of what we're seeing in the marketplace, and then the various discussion points that you are looking to hear about following either your questions or you contacting us during the week. James, so tell us about what you've been up to this week. What are you seeing? What is out there currently?
It's been a busy week, lots of mortgage valuations. I've been in central London, I've been on the outskirts of London, I've been into the home counties, seeing lots of sales. The market seems fairly positive still, still seeing a number of transactions whereby the end price is either very close to or even over the asking price, with some sales going to sealed bids, which the sort of agents are then managing. So still lots of activity in the market, and obviously as we get closer to that sort of stamp duty holiday deadline of the end of March 2021, that could really remobilize some buyers in the coming month, as they're going to have to get the sort of everything together if they're going to make use of that stamp duty holiday.
Yeah, I mean, the market and the sentiment at the moment is fascinating across the entire UK and Scotland. To bring that in, the volume of either purchase transactions, mortgage applications, further advances, new loans, renewals, it is just unprecedented in the context of where we are at the moment, with the pandemic and major cities now going into tier 2, tier 3 levels of lockdown to a degree, and the property market is just relentless in the sense that the transactions, the offers, the valuations that we're seeing, everyone that's in that supply chain from mortgage application to survey to conveyancing and all the legals involved in that supply chain at the moment is under huge pressure. Every bank, every lender, brokerage firm, agent, valuation company, conveyancer is working all hours in the day and weekends just to manage the throughput and volumes, and many firms have backlogs of 4 to 6 to even 8 weeks to get through that work. I think what's really interesting, we haven't highlighted recently, that's coming out now, is the average sales period has come out, and you're looking at now around 8 weeks per transaction. Obviously it's different in every place, but broadly, and that's just because there's now delays in the conveyancing, in the mortgage applications filing, in getting the survey stroke valuation returned and processed, and that's causing a delay in the time period required. Anything you want to add on that, James?
Yeah, I was just going to add, I mean, as we refer back to the stamp duty holiday at the moment, I think sellers and buyers are also time limited from sort of both angles, and it's really motivating both the sellers and also the buyers just to obviously enact some of these transactions, which may be sort of fed into shortening those marketing periods.
I mean, I think that the big question with the stamp duty holiday and the time periods that you're talking about, and where we sit literally 10 days away from November, the question of longevity and sustainability, this run on the market, does it have the legs to go to December, January? Is it going to go all the way to March? And does it have the sustainability and the legs to go deep into 2021? And I think that's really, really now the question that everyone wants to know the answer to. So if we go back, call it 3 or 4 months to May and June, and we knew there was this 6 to 8 week pent up demand because of lockdown, the question then was, what happens when furlough expires? What does October and November look like? Well, October, and we're going to go through the numbers in a minute, is extremely active, as we've just said. November, purely because of the volume we're seeing now, will continue with that. And so suddenly, the question is not where we're going to be in September or October. Everything just gets pushed forward now to December, January, and February. Okay, so let's go through some intel. Keep your questions coming in. Obviously, we'll go through them as and when. Let's go through the numbers this week. So everyone that's online, handout number 1 on the right-hand side, handouts, and let's look at the headline figures. And I think very much in line with last week. So we're looking at the 12th of October, highlighted in the Royal Navy blue. You'll see week 41, 553 new instructions, which is broadly where we've now sat for the last month after a couple of very strong weeks following the summer holidays. So I think we're in a level now, what seems like a consistent path of where the market is sitting. So that's 4 continuous weeks, broadly at the same figure. And then if we move to the sold column, the 164, again, slightly down on the previous weeks, but very, very consistent. And I think what we are seeing, James, is that the level of transactional volume and properties coming on stream is now finding a level, a consistent level or a base of where the market currently is. I don't know if you want to add anything on that, James, or anything you're seeing that's maybe a bit different, but it looks very, very consistent at this moment in time.
Yeah, it's very positive. I think, like you say, I think it's important to have some stability in the property market. And like you said, the last 3-4 weeks, we've had that sort of steady influx of instructions to under offer to sales. And we don't really, in the property market, we don't want this sort of boom bust cycle of 800 new instructions and so many sales, and then sort of have a subdued period of weeks. We would much rather have. And I think it's better for the market, more positive, if we do have this sort of more steady growth and stability in the market.
Yeah, I mean, I'm really excited for the next few weeks, because the next few weeks, as everyone is aware, we're going to get the latest round of transactions that have gone through, and also the approvals coming again. And as I estimated, I believe we're going to see extremely strong performance, especially with the next round of mortgage approvals. I think they are going to be unprecedented, something in the region of a 15 to 20-year high in approvals, to reflect the buoyancy and the activity in the transactions that are taking place. I'm pretty sure that over the next week or two, when we share with you that data when it comes out, that's the story we're going to be telling. Also, just to pre-announce now, next week we've got our friends from Lunres coming back. So we're going to do a slightly extended version next week. So please do join live if you can, so you can get your questions across. We will be talking all things data, trends, and activity with our friends from Lunres, like we did previously. And I think that's going to be a really, really, really exciting show. So let's talk about what's happened on the ground in terms of work-wise. What are we seeing? What assets are trending? And maybe we can discuss some of the nuances of the market that we're seeing on a daily basis, just to share that intel, content, and knowledge with the rest of the market.
Yeah, so over the last 6 months, we've obviously brought sort of deals of the week, if you like, of those 10 million plus deals which have been happening. And I think you've got some more data on this, Rob, but that seems to be a particularly active sector of the market, with buyers both domestically and some international buyers, just with their geographical travel restrictions. That market still seems to be performing very well.
Yeah, I mean, I think you mentioned last week something in the region of 1.13 billion of super prime, call it 10 million plus transactions had taken place, which was 16% higher than the previous year, and more or less a similar line of volume of transactions. I think that just shows the buoyancy. I think some of the key areas, and I've just seen some of the new schemes in Grosvenor Square this week, and that type of new build concierge facility, super upper end prime product in the capital, in Mayfair super prime hotspot location, is still attracting the uber wealthy on planet Earth. And the kind of assets or asset that we would have seen this week would be a 20 to 30 million pounds property in a building that's trading 40 to 50 to 60 million. One of the trends that we are noticing, and this is probably a shift, and I think Grosvenor Square in that area is an important one, is maybe the One Hyde Parks and the 199 Knightsbridge, your previous decade of super uber prime new build product, is now being superseded by some other schemes, maybe your Chelsea Barracks and your Grosvenor Square, that is really your 2020 product and offering the highest levels of service and facilities over and beyond what we would have seen in the previous decade. What are your views on that?
Yeah, I'd agree, Rob. It's interesting with Grosvenor Square. It's almost seen a switch from a mixed-use residential office space, and obviously you had the USA consulate there, to a real super prime residential hub. You've got sort of three main schemes which are now selling. You've got sort of the Finchatten scheme, you've got the Loader scheme, you also got the conversion of the US Embassy there. So it's really the sales there and the sales volumes, the interest in that is probably one of the number one selling new build super prime in London really at the moment.
I mean, just to share some context with the the viewers. Talk us through some of the price per square foot being achieved and the ranges or the blended averages in some of those things, just to get some real context of what sits behind those numbers.
Yeah, so I think we understand some of those sort of blended averages on rates per square foot. The real prime flats within Grosvenor Square are selling for around £6,500 per square foot, and those units without the sort of prime views of the square are averaging about sort of 3.5, the late threes per square foot. So real staggering prices.
Yeah, I mean this takes price per square foot levels to another level and a new high, and I think it really takes us back to possibly 09, 2010 of London, and possibly along with New York being the super prime capitals of the world, and the fact that London provides such great transparency, legal education, is the absolute attraction, along with what is perceived to be a cheap currency to your overseas investor, and possibly not so much on the new build stock, but the secondary stock that has seen price declines over the last few years, possibly a well-priced product, has allowed that marketplace to remain attractive, and even more than attractive compared to other major cities across the world.
Yeah.
And that trend is very similar to 09, 2010, and it remains to be seen again the sustainability and the longevity of that moving into 2021. I'm very confident that that marketplace will continue to perform on the back of all the variables and the fundamentals that I've just raised.
Yeah, I just wanted to add another thing in there, Rob, is some of these super prime central London developments, the placemaking and on-site facilities seems to be a real sort of linchpin and what buyers are looking for. I don't know if you can sort of add anything to that at all.
Yeah, I mean, one of the schemes in Grosvenor Square is backed by the Four Seasons service, and to be buying a property and getting 5-star luxury service, support, concierge facilities provided to you as if you were in the Four Seasons wherever in the world, and managed and run by Four Seasons professionals, is a huge attraction to that type of buyer and that marketplace. And I think it is taking that kind of product to another level, and having your cinema room and your business meeting rooms and your facilities and your gyms and your spas and your swimming pools and your guest areas are just taking that living experience beyond, as well as your dining and your food and concierge facilities. So, it's going to another level, and the market demands that now. That's what it wants, and that's why people are willing to pay the kind of numbers and figures that you've just reported and presented.
Yeah, I was just going to have a quick run through. I mean, Chelsea Barracks, another scheme that has absolutely stunning leisure facilities, sort of underground tennis courts, 24-hour concierge, the sort of real hotel experience whilst you're in your own home, really. That's what sort of buyers are are looking for. And over the years, we've seen developments in sort of central London, Marylebone, the Chilterns, we've seen Lincoln Square, we've seen the Clarges, another super prime scheme, and the leisure facilities, all of these really are stunning, and that seems to be one of the main draws for buyers.
Yeah, I mean, I think you and I went to Chelsea Barracks together, and we were very impressed with the facilities that you've just discussed. I mean, the level of detail and investment that had gone into that was as high end specification as you are possibly going to find within the market space. And I think, you know, from us as professionals seeing that product, you can understand why it is attractive to a certain buyer, let's just say, especially your overseas buyer that wants everything, everything that there is. Last few points, and I just want to make sure we cover what everyone is discussing. The volume of £1 million plus sales that are going through has reached a new high. And I think 17% increase broadly on this time last year, and that's reflecting the figures that we would have shared or came out last week, that property growth across the UK is going up, and the numbers being seen again broadly range from anything from 1% to 4%, depending on what geographical location you're in. And I think that is a story within itself of what's been created over the last few months following lockdown. I don't know if you want to add anything on that quickly before I hit the last question.
No, that was all for me on that topic, Rob.
Great. So just quickly moving on to the rental market, there are fewer new tenants in the marketplace, and there's a high volume of stock available now because of the change, especially in central London, because of the changes in people's geographical living patterns in the short term. And I suppose the question is the continued impact of what that has on the rental market. And without question, there are now discounts available for the renters in that marketplace. And there are also void periods that are being seen by landlords that maybe historically they wouldn't have seen. And then the impact that has on yields, returns, investment, mortgageability, and repayment of terms in the current market. I think that trend moving into November and December, which is notoriously the most challenging period of the entire year for the rental market, for the landlords, because they don't want a vacant property in December going through the winter, because the least amount of people move then. So there's going to be real pressure in the coming weeks on the buy-to-let market, the rental market, and that space. And I think that trend is going to be something we'll probably discuss further next week with our friends from Lunres, and we need to update the market on as we see it more, because a lot of the product we do is your buy-to-let, your HMO, your rental and investment market, and that's going to come under a lot of pressure in the coming weeks. James, your view and opinion, or anything you want to add on that before we close out?
Yeah, so the average age of the renters in London is reducing, and there's statistics are saying there's a rejuvenation from those young professionals wanting to live in London. But like you say, the main concern for landlords is going to be voids. Here in London, other concerns might have worried landlords more, such as the sort of quality of tenants, the sort of doing the background checks. Do they need to get sort of 3 months rent in advance? Landlords now are just going to be satisfied if someone's in their property, their sort of the passing rent is being paid, and there's no voids.
Yeah, I think we must pay great significance and attention to how that develops over the next 3 months. Share the data, share the intel, give you the live feed, because eventually everything that's happened over the last 6 months will massively impact that marketplace. And yes, today we've concentrated and focused and shared with you a huge insight of predominantly prime, super prime, or 1 million plus transactions, and the fluidity and the strength of that market. At the same time, the commercial market of investment, mortgages, stroke lending, stroke activity is going to hit a real block, especially from the residential lettings moving into November and December. And I think there is going to be a lot of pressure on pricing because of that. And I think we need to watch that space. It would be really good, as I said, to get a nice in-depth, concise update next week on the show. Thank you for everyone for joining. Thank you for all your questions. Thank you for continuously updating me, watching us on LinkedIn, watching us on YouTube, and all the other outlets. Thank you so much. Next week, do share with your colleagues, because it's always great when we have our friends from non-res with us. Extended show next week, 45 minutes. Hashtag askrobco next Wednesday, 1 o'clock, special edition. Have a great week. Be safe, be healthy, be well. Thanks, James, as always, for your great input. Thanks, everyone, for joining. Super, really appreciate it. And we will see you all same time, same place next week. Take care, everyone.
Thanks, everyone.